Hello, everybody. Thank you guys for joining. We're going to wait just a minute or two for more people to join. Today is the webinar regarding our broker programs and how to work with Express Capital Financing to create more deals, how to win your borrowers over, different add values and programs that you will have at your disposal. Like I said, we'll just wait another minute just for a couple more people to join, and then we will get started right away. In the meantime, if everyone would like to just give me a little bit of an idea of where we are, experience level, things like that, or if there's anything that you are curious to learn more about, put it in the chat box. Let me know, talk to me. I will be glad to cover any topics that will help you guys do more business. Okay, so let's get started. I'm just going to open up my chat box so I can see what you guys are telling me. All righty. So today we're going to cover a couple of different things. I'll go over my agenda right now with you. So first thing we're going to do is we're going to go over the different programs that are available through Express Capital Financing. We're going to go over how to submit deals, how to get pricing on a deal, processes, how that looks, what kind of documentation do we require, how to win deals, and different tools that are available to you. Okay. So let's start with our programs first, and I'm going to walk you guys through with our website. If everyone could see up here, it's expresscapitalfinancing.com. Again, that is expresscapitalfinancing.com, and I'll put that in the chat box for anyone that wants to keep it open and follow along as we go. So first things first, we're going to start with our every single day program, the way that we started in the industry, actually, which is our fix and flip program. So fix and flip loans are created with a short term, typically 12 months. It includes high leverage, speed to close. Generally, these are used for properties that people are going to disposition in the next year or so, whether they're going to flip it for a profit, or sometimes they'll even use it for a burst strategy, right? So they're going to buy it, rehab it, rent it, and then they'll look to refinance it for potentially a cash out, or just to keep the current just to pay off the current debt and let the property cash flow even more. So a couple of quick points when it comes to this program is that there is no prepayment penalty, right? So if I'm going to be in and out of the deal in 6 months, I would only pay 6 months worth of interest. If I'm in for 5 months and a day, I pay interest for just 5 months and a day. We lend nationwide, so any city, any state. When it comes to certain markets, we do obviously look at the rural aspect of a property, right? So if it's just a property in the middle of a whole bunch of land for about 10 miles, yes, we might not fund that deal. However, if there's close enough comps or it gets marked suburban, but comps are a little bit further away, we could generally talk and see how to make the deal make sense. But just so you guys know, any city, any state, we can help. We offer up to 90% of the purchase price, right? So this is where you're going to get your highest leverage on all the programs. Generally speaking, most of them will be between a maximum of 80 or potentially sometimes even 85. This program, you're going to get 90% of the purchase if they qualify, if they have experience, and 100% of the rehab. Now, when it comes to lending, obviously, there's a couple of different things that have to be looked at, right? So if one number matches, but there's another number that does not match, we have to go with the lowest that'll make both of them match. So what I'm trying to say is, let's just say they qualify for 90 and 100. but the loan amount would be 85% of the after repair value. We would have to bring that down to that 75, obviously. And the same goes into for lopsided deals, right? So, and again, I'm covering more of the more difficult types of deals just because these are the ones that we see a lot that have the most questions surrounded it. So lopsided means that my purchase price is 100,000, but I need 200,000 to renovate the property, right? My construction budget is costing me more than the acquisition of the property. So when it comes to those, we want to be at 90% loan to cost. And if that fits within the parameters, we can go as high as that 90% of the purchase price. But generally, when they're lopsided, depending on how lopsided it is, that the initial leverage will come down, right? So that's just something to keep in mind. Again, my goal for today is to give you guys all the information you need to be able to set expectations with your borrowers so that you can practically close them on the first call and then call us back afterwards just to confirm the pricing and get that deal in the works. Now, we have no monthly minimums, which means that we do not require a certain minimum of interest to be paid from our borrowers. So they're not locked into deal for 3 or 6 months. Sometimes they'll say, oh, there's no prepayment penalty, but you have to make a minimum of 3 months worth of payments. It's practically the same thing. We don't do either of the two. So if they're in and out, they only pay for what they used. We offer unlimited draws, so we don't require our borrowers to be on any specific draw schedule. They can do one draw throughout the entire loan, or they can do 50 draws, depending on what fits their process and how they would like to receive those draws. Now, when it comes to the draws, we fund the rehab after completion, right? So for example, if I have 20 line items on my scope of work and I completed 5 of them, and I say, hey, I would like to you can now request funds for those 5 completed line items. We do percentages also. So if you've completed half a kitchen and it was a big expense, you want to get reimbursed for that, that's not a problem either. But just keep in mind that it has to be at the property. Either the items would have to be at the property or it would have to be completed for us to be able to fund that draw. We don't have any junk fees or application fees, so you don't have to worry. We don't get paid until we close. The only thing a borrower will ever pay before they close their loan is a credit check and an appraisal. Our rates right now for our hard money products are starting in the 7.5 mark. We offer back office support to assist our borrowers and our brokers communicating with all the third parties, whether it's title, legal, insurance agents, or anything of that sort. We'll be able to go ahead and step in and assist them with that. The processor will assist with that and kind of give you some guidance throughout the entire process. Our loans are for 12 months. It's not a 10-month where a 7% interest is really, 8.5 or 9. So these are full 12-month loans. And we do offer a free 3-month extension, right? And that's for 0%. We offer, so technically the borrower has up to 15 months. And if they need an additional extension on top of that, it would just be for 1%. Our certainty of execution, we do a lot of digging up front when we're looking at the deal for the first time to make sure that everything makes sense and fits so that we do not have to change any terms at the time of closing, right? So sometimes an extra 5-10 minutes up front can save us hours in the back end. And that's kind of what we're looking to do. We're looking to make sure that everything makes sense up front so that we can surprise the borrower and yourself with a good surprise as opposed to anything negative. Proof of funds are totally free. We do not charge for that, right? So if a borrower is looking to place offers, they're talking to their realtors, they're calling for sale by owners, or maybe they're just driving for dollars and they want to show their sellers or their realtor the ability to close. All we ask is for them to do a soft pull with us so we can know approximately where their credit score is at, as well as showing us their proof of funds to show that they have enough money for the down payment. And then we'll go ahead and write up as many proof of fund letters as they need until they get the right property under contract. Points can be paid at the time of closing. So we have a lot of different add values that we can use to get creative sometimes. Keep in mind, something like this would be done for the right borrower. So we wouldn't do this, let's say, for a brand new investor where they could pay the points at the end, but we can defer points to when they sell the property. It would just be added to the payoff And that helps with liquidity, right? So if a borrower has, multiple deals being worked on at a time, or something of that nature, we can look to find ways to save their cash, to put to more deals so that they're going to be more profitable with their money. Our interest payments are made as dispersed, right? So what that means to the borrower is, just for example, if I'm just going to give you a simple one. So if my initial loan amount was 100,000 and I borrowed $10,000 for renovations, my interest payment is going to be based off the $100,000 until I start to draw out the money from the renovation draw. If I drew out 5K, then my interest payment's based off of 105, and it's per DM. So it's when you drew it is when it starts to incur the cost, right? And that saves them a lot of money, right? So think about, I just gave you a very small example on a rehab budget where it's only $10,000. But think about when those rehab budgets are closer to $100,000 or $200,000 at a 10% interest rate. That's $1,000 a month that they could be, a little bit less, but about $1,000 a month they could be saving, putting into their pockets, as opposed to making interest payments on it. When it comes to fix and flips, a lot of the times these properties are sourced in many different ways, right? So sometimes, like we said earlier, for sale by owners, driving for dollars. Sometimes it's also from auction properties or distressed properties by the tenants, which means that we can't always get access to the inside of the property. In those scenarios, we are flexible where we can do drive-by appraisals where we have no interior access. We would just request pictures of the interior. The appraiser would drive by the property, give it a quick look so he understands what he's appraising so that we could get a value. Now, another thing to note on that is that, I wouldn't advise, let's say, a new borrower to do something where they have never walked the property. It's important to be able to understand that. And when you are doing that, always assume the worst when it comes to the interior renovations. Assume that you have to change everything so that if the cost comes back cheaper to repair, you're coming out more profitable and your numbers will only be better and not potentially a loss. Some markets, it actually is quicker to get a desktop appraisal, which is pretty much someone comes out there to measure, take pictures of the property, passes it to an appraiser who is then going to go ahead and be able to appraise multiple properties faster, right? So the goal is the whole point of that process is that the appraiser does not have to go and do the measurements, because that can be done by somebody that has basic knowledge. Whereas the appraisal, where they're required to have their license and understand how to do that, they can just focus on the appraisal. So some markets, it does come back quicker. Some markets, it's pretty much the same time frame. But if you have any questions on that, you can always feel free to reach out or put it in the Q&A box, and I will be happy to answer them. Another big thing, and this is a real big value add, and most of my borrowers appreciate this, which is the unlimited transactions, right? As long as the borrower has enough money to put a down payment, we are not going to cap how many deals they can do with Express Capital. So whether they're doing 2 deals, 10 deals, 20 deals, as long as they have the down payment, we're going to keep funding them. And that's a really big thing, because a lot of, especially borrowers that are familiar with more bank loans, they're capped on how many properties are able to have on the books at a single time. And this is going to cap the amount of projects that they can work through. And we all know that in this industry, it's all about the quantity as well as the quality, but the quantity and the ability to keep turning over those dollars, which is going to make you more profitable. So we are never going to cap a borrower. They will never get a compliance call from us saying, hey, you have to pay off this loan before we fund the next one, or anything of that nature. Now, if you go on our website also and you go to the rate and term section, the rates and terms section, you'll see a really strong guideline to how we lend, right? So you'll see our minimum loan amount, which is $100,000, our maximum loan amount, which would be on this product, $5 million, our max LTV, which we discussed, which was 90 and 100, with 75% of the after repair value. We can do both for purchase and refinance, right? So if somebody has already purchased a property themselves and they realize, hey, wow, this needs a lot more work than I anticipated, and I need to borrow these funds to do it, we can help them with that. Even if they're, again, mid-constructions are a little bit tough, because there's usually questions as to why they weren't able to complete it the first time. But as long as things make sense, we'll do refinances and purchases. And again, guys, I know I'm mentioning some things and saying the words tough or difficult or things like that. In a scenario where everything makes sense, it's fine. I'm just trying to bring out some of the difficulties as well, so we know what questions to ask when talking with our borrowers to understand the scenario better, so that we as brokers will you as brokers will have a really good understanding of the deal. So when you're talking with us as your loan officer, we are able to really guide you through that and help you get the best way and make sure that we get to the closing table. We are always going to be taking first position liens. We do not do second. We usually we can offer a term sheet within 24 to 48 hours, and our average closing time is about 2 weeks on these loans. We offer 12 to 36 months, depending on the size of the project. Most of our deals will be in the 12-month mark, but if you do need 24 or 36 months, make sure to include that information in your submission, and we'll let you know if we're able to do that for that deal. Again, we're nationwide lenders, rates starting at about 7.5, and we only incur interest on the monies that are drawn. So that's the as dispersed that we were talking about earlier. When it comes to origination fees, it does say here 2+ points. When we're working with brokers, we do understand that you guys have to make some money as well. So we generally do discount those a little bit in order to make some room for you guys. So if you have more questions on that, again, we have a deal you want to talk about it. Hey, where could we be at? This is where the expectations are. Feel free to call us. We'll talk it through and find the best way to get that done for you. These are interest only payments, so that you're not worried about the principal and a higher payment every month. So this is to keep it a small payment, get them through the construction so that they could refinance or sell the property to an end user, where they can then start their next project. Entities, we only lend to entities, so the borrower would have to create an LLC, a corporation, or of sort, and they could have themselves, partners, all included in there as well. Now, one thing, now that we mentioned partners, actually a really cool trick is the partnerships, right? So for example, if let's just say I'm doing a deal and my experience is not strong, but I have really strong credit, and my partner who has really strong experience but really terrible credit, we can partner up together and create a perfect file to get the best terms possible, right? So we'll mix and match and take things from both scenarios to make a one big scenario to help make the deal make sense. Property types. So for this program, we are doing this is really for 1 to 4 units. We do up to 100 units and greater. That would be under our multifamily and mixed use bridge, which we'll talk about shortly. But this specific page right now is for the 1 to 4 unit properties, right? And we can do condos as well. And if anyone has any questions on this program, feel free to put it into the Q&A box, and I will start going over to the next one. Ground up construction. This has been a massive product for the last year or so, and that's due to the fact that there's not a lot of listings right now in the market for investors to pick up, as well as we obviously have a very big housing issue, which is there are not enough houses for the amount of people that are searching. So ground up construction has been something that a lot of people have switched over to, or people that used to do ground up construction are now coming back into the market. So keep an eye out. You'll probably see a lot of different prospects looking for construction loans. Now, when it comes to the construction loan, it works very similar to the fix and flip with a couple of minor differences. So we'll cover those right now. So the first thing is, when it comes to ground up construction, you're always going to be lopsided. Your cost of acquisition is always going to be less than your development cost, and that's normal, right? So the way we operate on this is that we look at an 85% of the total cost of the project, and that's where we want to be as far as our max loan amount. When it comes to ground up construction, also, we will not fund a brand new investor, right? A fix and flip, we will do a brand new investor to an experienced investor. When it comes to ground up, they do need to have some experience. Generally, I like to say at least at minimum have one completed deal on your resume. And again, there are ways that we can make exceptions, right? So for example, if there's a very strong borrower who's done many fix and flips and had very high gut renovation costs to excuse me, to renovate that property, things like that we can look at to approve him for a ground up construction loan. Now, one thing that I will always request whenever I'm looking at a deal that is ground up is to have a resume so that I understand the borrower's experience so that we can gauge it properly. These are also 12 to 24 month terms, interest only, up to 75% of the after repair value as well. And you'll notice here it says up to 75% loan on the purchase and 100% of the development. We will go up to 75 if as long as there are plans and permits in place. If for whatever reason we do not have them yet, because in some places you actually cannot pull them until you own the property, we would be at 50 and 100. But again, most of the time, if it's a small purchase for the acquisition, this 85% loan to cost will make them have a large down payment or just buy the lot. If it's like a 10 or 20K purchase, that's usually what that looks like. These loans, again, are going to be from 100K to 3 million. We do a nationwide footprint. So again, any city, any state, as long as it's not really rural or there's not comps that are way too far away. So we're looking for basic markets where we can see the values, we can see that it'll sell quickly. You know, there's not going to be any issues offloading the asset. Negotiable release prices, right? So if you're doing, let's say, multiple projects on the same lot, we can help to pretty much come up with a release price per property. This way you can actually portfolio 2 or 3 projects together and know exactly what you're gonna have to pay off in order to then go ahead and sell the next 2 and then the third. Our process is very quickly. In order to be able to provide an LOI, we can usually provide one within 24 hours unless there's a lot of questions or there's something wrong with the project. But if everything makes sense, we are able to provide an LOI within the same day. And you'll see here our deal experience has a minimum of 2+. We can work with 1+ if it's a very heavy project or it's very luxury, then yes, we will want to see more experience. And to let you know, the different types of properties that we do ground up construction for are single families, 2 to 4s, and even multifamily. We can look sometimes at mixed use if it's majority residential, but we don't do ground up for office spaces or any other major commercial types of properties. You'll see here, it'll tell you exactly what kind of requirements we have, right? So for the borrower sponsor, we want to see the resume, their summary of experience, which I mentioned before. A personal financial statement will be required to close the loan. Again, this is not really underwritten, but it's good to have an idea of where our borrower stands. And then as far as the, if you're doing a condo conversion, right, or building a condo, just a little bit more, like we'll want to know a little bit of a project summary, what the exit strategies, are we selling it? Are we going to refinance it and hold it? Do we have the plans and drawings? And we always need the detailed budget, right? The scope of work, right? Well, how much is it going to cost us to build this project? And what does that entail? And that's for 2 reasons, right? We need the scope of work, number 1, to understand the project, to be able to send it to the appraiser and get a appraisal ordered, because they're going to base all of this off of the future value of the property. So what is this going to look like? And then the third thing, obviously, is to be able to send out the draws and have an idea of, hey, how much money do we set aside for each item? The P&L, which is pretty simple. Usually we'll actually build that out for you once we understand the numbers and have a good idea of the project. Proposed timeline, you know, this is something more that the borrower should prepare for themselves to understand, hey, where am I going to be throughout the project? At what point am I going to go ahead and pull permits? When am I going to start construction? When am I going to start to market the property? And when am I going to sell it, right? So having a timeline and keeping to that timeline is only going to help them. We don't require that they give us this actual timeline. It's just really written there for the borrowers. Construction company bio and a borrower comps, right? So comps are really there. We always like to be able to have information from the borrower as to where they got to their value so that we understand it. We can make sure it makes sense, as well as provide, you know, if let's just say the appraisal comes back lower, at least we know the information that we need to know to be able to talk to the appraiser and see if, hey, was there a comp missing, or was there something that we didn't see, and that's why that price is reflected. So this is the ground up construction program. And again, anything that's not listed here is probably going to be exactly the same as the fix and flip loan. The only thing we didn't actually talk about, oh, here we go. We also have the rate and term page here. So you'll be able to see the minimum loan amounts, maximum loan amounts. This should actually say 5 million. We will do greater loan amounts for multifamily and things like that. But for the 1 to 4 units, we generally don't want to be too ultra luxury. So that's why there is a cap on the max loan amount. Certain markets, by the way, just to add into that, like for example, the Hamptons, that is a very liquid market for $1 million properties, right? So if someone was doing a $5 million single family there, that makes sense, right? So there are times where we do make exceptions where our common sense underwriters. So as long as it makes sense for the deal, for the project, we can get behind it. Maximum LTV would be 75 of the purchase, 100% of the renovations, with a max of 70% of the future value. This would be for both purchases, refinances. A lot of times investors hold on to lots until they're ready to develop it. So that's totally fine. Always, again, first position lien. We can get a term sheet out within the same day and close within 2 to 3 weeks. 12 to 36 month terms, and nationwide. Interest rates are just a half a point higher on the ground up construction, which is not too much, honestly, for the added risk that we're taking. And you also have here the dispersed interest payments, right? So you're able to make those payments and especially on ground up construction, that's going to save them a lot of money. They don't have to make payments on the construction funds when they didn't even get a chance to break ground yet. Also, interest only, it is recourse, and it is also to an entity. And again, we will do, this page is for the 1 to 4 units, and we do also lend for multifamily construction. So it could be 100 units or more. As long as the borrower has some experience or close to it, we can look at it and see how to go about it. We'll move on now to large balance commercial, which I'm not going to spend too much time on because this deserves a webinar of its own because of how diverse commercial gets, because there's different types of assets. Each one is kind of looked at differently, right? You have your A assets, your B assets, and C. A would be usually your multifamily, industrial, warehouse. B could be in today's markets our office spaces, retail, and things of that nature. So excuse me. So let's take a look over here, right? So these loans are for $1 million plus amounts, right? Again, we are nationwide for this product as well. We do commercial units, mixed use, multifamily, retail. We'll go into more of the asset types over here below in a second. Actually, it should be right over here. So the property types that we cover are the multifamily, retail, mixed use, office buildings, industrial warehouses, self-storage, assisted living, and strip centers. I'm actually going to be removing assisted living from this page. We do assisted living more for permanent. We probably would not be so open to it right now as far as the bridge side. Now, anytime we're doing a commercial bridge, the loan amount does have to be at $1 million plus. Just to give you a little bit of a sense for our appetite, we don't really like so much when there is a massive renovation to be done on a commercial project, right? So we're looking for, medium to moderate renovation cost, a million plus, let's say, on the loan amount. This way it could meet that. Purchase million plus purchase price, so we could meet that loan amount. We do up to 3 years on this one as well, and our loan to cost would be up to 90%. Now, the stabilized value, which would mean the ARV for commercial projects, because we're talking about how they perform at stabilized positions. So for special type use properties, we're going to limit that to 60%. For your generic commercial, which would be, let's say, your office and retail, would be at 75%. And then your multifamily mixed use will go up to 80%. Our interest rates are generally hovering right now at the 1 month LIBOR plus some. So I would say about 6-7% plus. There is 6 months of minimum interest on this loan. Generally speaking, you're usually going to be in the loan for longer than the 6 months for these commercial properties, as there's a little bit more to do. We do offer partial recourse to borrower on these since the loan amounts are higher. Interest reserves if no in-place cash flow. So if you're doing a multifamily and the entire building is vacant, we may ask for some interest reserves, which is just a escrow account of interest payments to be applied to the loan when they're due. But if the property is rented, it's cash flowing today, and we're going to be doing, unit by unit, we could look to remove that. No dark buildings, which just means that they're completely shut out, like terrible condition, like really bad condition, not just what we look for. Like I'm talking about like beyond that. Land deal, we don't lend on land unless we're doing ground up construction. And we don't do ground up, like I mentioned, also for these special commercial projects. Our minimum credit score for this would be about 650. We can look at lower on a case-by-case basis. Generally, the borrower should have between 15 to 15% liquidity of the entire loan amount and 100% net worth of the loan amount. Again, there is flexibility there. That's more of just a rule of thumb. And rates here, as we mentioned, would start in the 6 to 7% range. And like I said, I will look to do a more detailed webinar specifically on commercial, as I feel that's necessary, especially in the markets to come. But today I just wanted to keep that one short, simple, and help you guys understand it at least. And if you guys have a deal or have any questions on it, you can feel free to email it to us or call us and we could talk it through. So now this program we're looking at is the multifamily and mixed use bridge, right? So this is pretty much the fix and flip loan, but we're going to be using what we're looking at doing multifamily and mixed use projects. Right. So when it comes to that, and there's a little bit more information here, by the way, on the large balance, which I'll cover in a second. It's a little bit repetitive, but this is specifically for these two asset classes, multifamily and mixed use. So we'll go up to 80% of the purchase price, 85% max would be the loan to cost, and up to 75% of the stabilized / ARV. Up to 70% cash out refinances we'll do, especially right now when rates are kind of on the rise on the permanent side. A lot of people are looking to bridge their loan, wait for there's a lot of different theories out there in the market. Some people feel rates will continue to go up. Some people feel it'll stabilize or come down. That's all up to opinion and of the person. So a lot of people are looking to do cash outs on a bridge, and then they'll worry about the refinance at a later date. We do offer also 100% of the renovations. And when it comes to other CRE properties, which are not multifamily or mixed use, we could go up to 75, which would be 80% loan to cost, 70% stabilized. So this would be, let's say, for retail and things like that, which we covered on the large balance commercial page. We are direct lenders on all of these programs, just so you know, not just this one. We offer competitive rates and terms to compete within our market space, nationwide lending platform. So any city, any state, which gives you a lot of flexibility to win deals. It doesn't have to be just in your backyard. And our loans are custom tailored to meet borrowers' needs, right? So as investors ourselves, we understand the process of what has to go through as far as the loan details for it to make sense for the borrower, right? How could we make this a little bit better for them to keep them in a better situation to, number one, complete the deal, and number two, be able to pay it back and move on to the next one and make their next project and more capital. So we keep that in mind. We offer the CapEx and rehab as well, recourse, flexible prepayment provisions, and we would love to work with all you brokers that are with us today on the webinar. Again, a little bit of repetitive information, but we'll go over it. 12 to 36 month terms. Interest rate starts at 7% for the multifamily program. And you'll see over here more information. You can find out, how to use the proceeds. Bridge loans are tailored to meet your specific needs. So you'll see here that we have more information on our guidelines. Interest only, time is of essence. We can close quickly. We can do partnership buyouts, transitional borrowers, or even distressed properties. And we can also bridge the gap for agency or CMBS takeouts. By the way, that's a really big portion of our business. So 500K is the minimum for this product. So multifamily mixed use, we can start at 500K for the bridge loans. Our maximum term is up to 3 years, interest only, 1.5 would be our starting points on this program. We go up to 90% loan to cost and 75% of the stabilized value of the multifamily of the project. And again, refer to here if it's a different asset type, because that does change, right? So 75% is for the multifamily mixed use. For other ones, it would be 70. Where do we go? Okay. Interest rates would start at, actually, this is the correct one. I have to remove that one. I'm not sure why that's there. So 7% would be our starting rate for this product. And again, 15% liquidity, 100% of net worth is generally where the borrower should be to qualify. Documentation is we would order an appraisal. We would get a PFS from the borrower. We do not need a profit and loss for the property. Actually, I will remove that. We do need operating. Well, we need a pro forma, right? So what are the what is the rent roll going to look like is more what we're looking for over here. Operating agreement for the entity that we're choosing to close with, the rent roll, which is stated above there, the purchase sale agreement, which is a PSA. If this is a refinance and it was recent, we will ask for the HUD because sometimes they don't show right away, the track record or resume, and a list of improvements made or need to be made, right? So if a borrower has done renovations already, make sure to let us know about that because that's credited towards the loan to cost, right? That was a cost of the project. Just because it was done already doesn't mean it doesn't go towards the project's cost. And again, guys, if you have any questions, feel free to put it in the Q&A box. I'm going to continue to go, but if I see a question, I will make sure to answer it. The next program we're going to discuss. So now we're getting into permanent financing. Everything we've discussed so far was a bridge. It was short term, slightly higher rates than you're probably going to see coming up now. Those are all used to either BRRRR to an asset that you're going to offload in the very near future. You know, you're in it for a short term, or maybe you have the capital to pay it off, but you just need it for in the meantime. That's what all those products are for. Everything we're going to continue to go into now is going to be permanent financing. So Len actually asked a question, does the LLC require for your product or vesting under the individual's name also acceptable? So we only lend to LLCs or entities, so it could be a corporation of some sort, but we do not do it in the individual's name. And that's because we're mostly lending it to the LLC, right? Because that also separates the borrower from the deal, which is in their interest. But obviously, that's something that they should speak to their attorney or CPA about to understand more about it. Yes, we do. So Len just asked, will a new LLC be allowed? And the answer to that is absolutely. A lot of the times, actually today, I had a borrower call me up and he wanted to do ground up construction. I was asking about his experience. And he was telling me, oh, no, you're not going to count that. That was, under a different LLC that I'm going to close with. That's not true. We will use experience from all their LLCs. It is very common for investors to have 3 or 4 LLCs that they're going to be doing some of their projects under. They don't want to have so much liability under one place. So we do allow them to create new LLCs. They can use multiple LLCs. And we will even allow, as long as their name was on the operating agreement of the LLC that did the flip, we will count that as experience. So let's continue now with the Express Bank Rate program. So now the Express Bank Rate is a commercial mortgage. This is made to give the borrowers an alternative option to a bank, right? It is going to be similar rates, maybe slightly higher, but honestly very similar. And we will be able to close these faster than a bank because of our normal processes. So loan amounts over here are 1 to 15 million. This is good for a purchase, refinance, and or cash out. These are for multifamilies, industrial warehouse buildings, self-storage, mobile home parks. So we can do a lot of different types of assets under this product. This is for all different types of commercial real estate. We offer up to 80% loan to value on multifamilies, 70 for mixed use office and warehouse, and then 65 for the mobile home park, self-storage, and then 60 for the retail assets, right? So it really spells it out for you here as to what max LTVs would be and the different types of assets. Loan to values, you see, would truly say up to 80. Rates are a little bit higher right now since they started to rise. So I would probably estimate closer to about a 4.5 right now. I will have that updated on our site. Credit score minimums are 625. And this is for investor and non-owner occupied properties. These would come with a 10-year term. You have a 5, 7, or 10-year hybrid, or you could do a 10-year fixed. And these are all amortized over 30 years, right? So there's not a balloon payment. It's just that the amortization is over 30 years, but after, let's say you chose a 10-year fixed, after the next 20 years would be an adjustable rate mortgage. Tax returns, we do require tax returns for this product. This is the only product that we require tax returns for because it is a bank rate. You're getting the best rate and we're closing faster than a bank. Locations nationwide except for the North and South Dakotas. And our DSCR minimum for this, so DSCR for those who are unfamiliar, is a debt service coverage ratio, which means that the ratio of the income to the expenses of the property, right? So just for example, to hit a 1.2, for every $1,000 of expenses that my property has, I should be collecting a minimum of $1,200 in rents. For mixed use, it's slightly higher. It's a 1.25. And for retail, we should have a 1.3. And the reasons of those are because number one is retail, you could have a vacancy that goes a little bit longer than in multifamily, let's say. There could be a little bit more expenses that come up. So we want to make sure that there's enough of a spread where if something comes up, the investor is not only cash flowing positive, but he's covered. Prepayment penalties, anytime we have a long-term product, there will be a prepayment penalty on it with the exception to one, which we'll go over soon. This is a five-year step down, which means 5% the first year, 4% the second year, then 3, then 2, and then 1. They could do a 7-year for a slightly better rate, or they can do a 10-year for an even better rate. There are options of buy downs, which we'll offer with each pricing that we send out. And these are non-recourse, right? So it's on anything $1 million plus, it's unrestricted cash out with non-recourse. So they don't have to sign any type of PG or anything like that in the loan docs, which is a really big add value to a lot of investors, especially, you know, some people will actually look specifically for that, whether they're investing with their self-directed IRA or something that requires that. Now that allows them to tap into additional leverage. Before I go to the next program, I'll open it up, but before I go there, Len asked another question. If the borrower is buying a home is in Texas or building a new home in Texas while the LLC is from New York, will that be acceptable based on your guidelines? So the answer is yes, the LLC can be from wherever they created it. However, they will just have to go online to that state where they're doing business in and register that LLC to do business in that state. A lot of the times that's something we could help out with, you know, just reach out to us and let us know while we're in processing. Hey, we'll need to have this LLC assigned to another state or allowed to do business in that state, and we'll direct you where to go for that. Winfred's asking, do you pull a credit report to obtain the credit score, or can you obtain the credit score from an alternative source? So to get pricing, I can look at an alternative source because that'll just give me an idea for where the borrower is, and I would feel confident enough to provide you guys with terms based off of that. But in order to close the loan, we will always have to pull credit. So now another really big product that blew up this year, which is the Rental 360. Actually, 2 years ago, I would say it blew up. And that's because COVID limited the amount of projects that, well, I don't want to say COVID, but our markets really, we didn't have a lot of fix and flip opportunities, right? There weren't a lot of listings on the market for investors to come and work on. So a lot of people have changed their strategy into acquiring long-term cash flowing properties, which is where the Rental 360 is going to come in. Now, this is all based off the DSCR, which we spoke about a little bit earlier, the debt service coverage ratio. So it's important to understand the property's cash flow as well as expenses to make sure that it actually can cover itself, right? So certain markets you're going to look at, and I'll use Texas since Len just brought it up recently. I was looking for properties in Austin, Texas, and one of the hard things about that market is that properties are selling at such a low cap rate because people are coming in there with a lot of cash. And because of that, it means that you do have to have more liquidity to get into some of those deals because the cash flow will not cover a max LTV loan, right? So some markets are more difficult than others. Some you may have to put down more cash. Some they actually make sense right away. Again, right now we're talking also the 1 to 4 unit space. So usually these are not the case. I guess what I was trying to say more was based on commercial properties in Texas, in Austin specifically. But this is important to understand, right? To understand how we're buying. Is this underwritten done properly? Will I cash flow? Will I not cash flow? Because at the end of the day, we should not look to buy properties for appreciation. We should look to buy properties for the cash flow, and the appreciation is the cherry on top that we get out of it. So now, top three reasons why people would use our product is there is no tax returns or 4506T required for the transaction. I mean, we don't verify any of the borrower's income. We're looking entirely at the asset. The only thing that the borrower brings to the table is their credit score. There's no DTI calculation, right? So when we're looking at credit, we're not taking into account all the debts that you have and trying to figure that out. That's not part of our process. And we're a very competitive solution for the Fannie Mae fallouts. So now when it comes to, again, looking at these deals, we're looking entirely at the income, the rents, we're looking at the expenses and the borrower's credit score to determine where their rate would be and leverage would be. And now we're going to go ahead and say, okay, well, with the maxes, does this make sense? Or do we have to lower something over here in order for the cash flow to be positive? And that's where we'll go ahead. And as brokers, that's where you want to, show your value and be able to talk to the borrower, educate your borrower and explain to them these processes so they understand what kind of deals to bring to the table for you so that you can get them funded and get them the best deal possible. So now our loan sizes for this product is 100,000 to 2 million. We do go up to 85% loan to value on these on this program with a 720 score. If they're below that, the maximum would be 80%. Most deals usually will fall in that 80%. A lot of people don't want to, over leverage themselves that much, but we do offer 85 LTV for purchases and rate and term refinances. For cash outs, our max would be 75. And our interest rates right now, these are fluctuating a lot. So again, I do have to update this one a little bit. Rates right now would be closer to the 6s. With low credit scores, it could even be in the 7s as rates are rising right now. But we are always in line with the market. Loan terms, we offer 30-year fixed. We offer 5, 7, or 10-year hybrids, all that come with a 30-year amortizing loan. Our property types for this product are specifically the 1 to 4 units, condos, PUDs, but anything in the 1 to 4 unit range. So this is not for commercial properties, and these are also not for owner occupied properties. So they must be investment properties. For cash flow requirements, we qualify them based, like we mentioned, off the cash flow, W-2s. They do have to own one property, whether it's a primary or investment. And if they don't, they can get around that by hiring a property manager. And we are able to close these loans within 30 days. 30 to 45 days is where I would guesstimate most of our loans are closing right now. Our loan purposes, we mentioned we could do purchase, refinance just to do a rate and term, or we can offer cash outs. Generally urban, suburban locations. We are a little bit more open to some rural than other lenders, but still at the same time, we do have rural guidelines where we won't, if a property is marked off as rural, we would not lend on it for this program. Our minimum DSCR is going to be 1.2. We can actually do negative DSCRs. Usually my question there to the borrower is, why do we want to do it if we're not going to cash flow positive? It does come with a higher rate. So generally your best terms are going to be at that 1.2, 1.3 plus is going to get you the best terms. But 1.2 is generally where you're going to get very good rates and be able to confidently sell those to your borrower. We also are allowing Airbnb properties under this program, and slightly different LTVs. So it's 80% max for purchases, 70% on refinances and rate and terms. They do need to have So if the property, if the fair market rent of the property makes sense, where we don't even have to look at the Airbnb rates because the property is going to debt service just based off of long-term 12-month rents, we are fine. We don't have to do anything different. That's how we would operate that. Now, if the property needs to show it only makes sense because we're doing Airbnb and we're collecting higher rents because we're doing short terms, then yes, we would like to see a operating income for at least 1 year to understand that. And we also would look to, a lot of you, if you're familiar with Airbnbs, you'll know of AirDNA, which is almost like the comp source for Airbnb properties. When it comes to Airbnbs, excuse me, we do have a minimum population by county minimum, and that would be 100,000. Again, this is not by the city. This is not by the state. This is by the county, which usually encompasses more than one city. So if it's decently populated, it should meet that 100K minimum. If there's any questions on this, please let me know. I'm going to go back to the chat because there was a new question that was asked. Does the hard money even need a credit score? So the answer is yes, we do need a credit score. We will fund, we will fund a borrower with a low credit score. The way that we would mitigate that is by including interest reserves, depending on how low the credit is. If there's two borrowers, like we said earlier, and we can mix and match, one has a really strong score, one has the experience, that's fine. We would not fund a newbie with a very low credit score, but depending on where it is, again, it's not credit sensitive is the way I say it. There are definitely lots of ways for us to fund deals with low credit scores. Another great question: does the LLC require for your products or investing under individual? Wait, actually, that one was asked already. So Len, just in case you didn't hear the answer the first time, yes, we do require LLCs in order to fund any of our, under all of our programs. And let's go over to, actually, I'm going to skip over this one for just a moment. The portfolio loan is rental 360 with multiple assets. That's really the only difference. Now, there are pros and cons to them both. The pros of doing a portfolio loan is you save some closing costs as opposed to paying an underwriting fee. Let's say for each deal that you're doing, you could just do them all under one and pay one fee. You can also, another pro is you have everything in one payment. You don't have to worry about making 5, 10, 15, or sometimes even 50 different payments for all your properties. You just make one payment and keep everything together. Now, cons, if let's just say I want to, and it's not really so much of a con, it's more of a condition that comes with it. So let's just say I have 5 properties in my portfolio and I'm looking to sell one in the next couple of years. When I pay off that loan for that one property, let's just say I borrowed 100K towards that property, my payoff is going to be 1.2 of that amount, right? So I'm going to probably pay off 120,000 off that loan. Obviously, that 20K comes off the loan balance, but that's just to make sure that the entire loan doesn't go underwater or over LTV, loan to value, that would make us comfortable. Now, when it comes to the properties that we include with this, this is for SFRs, 1 to 4 units. Nothing above 4 units would fall into this product. So I do have to remove this part of the here as well for you guys. So again, this is just for 1 to 4 units. Townhomes, condos are allowed to be included in here. And our minimum count for the portfolio is 2, right? So I don't need to have 5, 10, or 20 properties to do it. I could do it with just 2 properties. The more you have, the more it makes sense, honestly. The minimum loan amount would be on this product is 150,000. Rates would start very similar to the rental 360. So this will be updated to show 6 to 7%. Loan values right now, we're going up to 75% max for purchase and refinances, right? So if you're purchasing a portfolio as well, we can do those. It would be slightly less LTV. It's 75 instead of 80. Loan terms is a 30-year fixed, 30-year amortization. We do also offer the 5/1, 10/1 ARMs, and interest only options are also available for this and for rental 360. We can do interest only. That's been also common now because a lot of people are looking to make their properties cash flow as much as possible, being with rates being a little bit higher. Sometimes they're doing a refinance. They have to make sure that they at least are able to pay off their current debt. So interest only options are definitely more popular within the markets. 1.2 minimum DSCR. Again, we could do lower than that. We could even do, if it doesn't, debt service, if the loan amount's below 500K, we can do it. We have a program where we won't even look at the DSCR. Rates will be higher. This product does not offer any rehab financing, right? So this product is for your properties that are currently, wait, let me just go back one quick second. I'm sorry. We do not have a negative debt service for this product. This is the portfolio. I apologize. So this, we do have to have 1.2 and 1.25 for loans under $1 million. We do not offer rehab financing for any of the permanent products. The permanent products are for properties that are currently stable. They do not require any more work. They're rent ready. They're cash flowing already. If you do need to do something in order to get it to that stage, that's where someone might look to do a bridge loan or use cash to be able to get the property stabilized. These are for foreign nationals. We can lend to them. They do need to have a credit score. They do need to be allowed to be in the States for the duration of their loan, whether it's a visa, whether it's a green card. As long as they're allowed in the States for the duration of the loan and they have a credit score, we can work with them. Minimum values. The properties do have to have a value of 100,000 plus to qualify for this program, even to meet the minimum loan amount, but sometimes you'll have, but I have 50 properties at 50K, it'll exceed your minimum loan amount. We still do need the properties to value at 100,000 minimum. Another pro that comes with this product that is automatically non-recourse. That's it. Again, a lot of people really like that, especially the self-directed IRA investors. They need that in order to be able to put their funds into it. So this is a product that can work for them. Our minimum credit score for this product is a 660. And the better, the higher the rate, the score, the better the rates would be. We've got another question here. So we can, will you require an operating agreement to be recorded while the state law does not require? No, we do not require operating agreements to be recorded. Obviously, though, when you send us the operating agreement, that is what we are using, and that is what will be in effect for the duration of our loan. Light doc commercial. So now we went over the express bank rate, which was the product that required tax returns and a full underwriting process to get the best rates possible. Now we also have a much simpler product for these commercial properties that for a slightly higher rate, you get a better product. Now, when I say better product, I mean it is quicker, faster, and easier to navigate than, let's say, the bank rate program. So over here, your loan amounts are going to be 100K to 15 million. This is again for commercial properties. Our terms would be a 5, 7, 10, 15, or 30-year fixed, right? So we have a lot of different options there. All that come with a 30-year amortization. Now we offer 80% LTV on all properties. So actually this one is already sent in for a revision. This is actually going to say up to 80% LTV because it does depend on the property type, and cash outs would not be at 80%. They would be maxed at 75%. That's actually in the works to be changed as we speak. Unrestricted cash outs, meaning we don't restrict, it doesn't matter how much they're cashing out as long as it's within the loan to values and it makes sense. We're not going to restrict them. We do not require tax return, W-2s, income verification for any of these products, with the exception of owner-occupied commercial properties, right? So if I am financing a retail store that I operate out of, then yes, we will want to see either the 12 months of bank statements or 2 years of tax returns, business and personal, to make sure that the borrower can afford to pay this mortgage. And again, both of them are an option. It doesn't have to be one or the other. It doesn't have to be both of them. It's one or the other. So obviously you'll get a slightly better rate with the tax returns than you would with bank statements, but they are both an option. We do lend to out-of-state investors. Rates on this product are going to start anywhere in the 5% plus range, depending on the asset type and the qualifications of the borrower. And we work with a minimum credit score of a 650 for this product, and we are able to close it in as quickly as 4 weeks. Now, these are a list of the property types that we will finance. Now, specifically multifamily, the 2 to 4 units, if you click it, it'll take you back to the Rental 360 page just to kind of show that we offer it. But it would not be for this product. It's actually a better product for that one anyways. But you get the, the auto services, condo conversions, daycare centers, development, residential and commercial. We could do industrial, mixed use, mobile home parks, restaurants, retail. Everything that you see listed here is within our wheelhouse. Here's a little, kind of snippet just to show you how it works and, each part of the process. You can feel free to look through here. And this is our programs. I know that there's a lot of information and, a lot of different programs. And that's one of the biggest draws that we bring to the table is the ability to provide a borrower with many different options. It doesn't matter if one day they're doing one type of deal or tomorrow they're doing another. They can make one relationship. And this way they're able to get all their deals funded in one place, not have to create 10 different people to talk to. We also, our ability to understand each of these programs helps us also navigate the borrower properly, right? So if they're doing a BRRRR, they have to exit it with another refinance. If there is a problem with that or something that we see that's coming up, we can at least talk about it up front, guide the investor on how to make sure that they will be able to exit the loan okay and make sure that they're profitable. Again, at the end of the day, this is all about being profitable, all about being able to get your money out there and be able to flip it as quickly as possible. A couple of other things that I kind of want to go into, how to submit a deal. So if you go to our Apply Now page, you'll see that there's a bunch of different options. So all of our permanent options are outlined on one list and all of our bridge options are outlined in the next. Now there's 2 applications for each product. The reason that we do that is for those investors or borrowers of yours that are a little bit old school, they prefer to have a paper application. You can click there and they can fill it in from the computer. They can print it out and fill it out and sign it, up to you, however that makes sense for them. And then we have for the tech savvy investors and the people that like to do things on a computer, they can do their application online straight from here. Quick heads up, by the way, we're actually going to be switching over this application to something a little bit more fluid. So I'm not going to go through this entire thing right now, but just to show you as a broker, you're able to select here that you're able to put your contact information so that we make sure that we're contacting you and not the borrower. You put your company name. And then if you are working with someone at our team, you can choose their name from here to make sure that they get your application right away. Otherwise, we'll make sure to get you over to somebody that can help you as quickly as possible. And every one of our loan officers are educated in these programs and can help you and navigate you through the entire transaction. Then you'll be able to select the program type. And as you go through along, depending on the type of program you're asking for, the asset type and everything else, it'll open up the proper questions to make sure that we have everything we need to be able to provide you with a term sheet right away and get your deal closed. So again, the Apply Now page, you'll have all the different options. With the exception of one, there's only one product, which is the portfolio, which will actually download for you our portfolio submission form. So I'm going to open that real quick just to show you guys what it looks like. And let's just do this. So it's a quick data sheet where you're able to put the addresses, the number of units, the apartments, yada, yada, yada. And obviously, depending on how many properties they have, they're able to put as many as they need here. It'll ask for the number of units, the purchase prices, lease start dates, values, payoffs, rents, insurance, everything that we need to be able to give you a quick quote and let you know exactly what the terms would look like. Oh, I lost this. Let's go back here. Okay, so that is the Apply Now page. One more thing, a few more things that I wanted to go over, just to talk about at least verbally, is some add values that we offer in order to help win your deals and kind of talk to borrowers and ask questions about so that you can understand them better. So one of them, which and we probably mentioned all of these, but I'll go over it just to kind of give you a quick list. We have unlimited financing. So as long as we have down payment, we're able to get into as many deals as possible. High leverage, right? Up to 90% for some products, 85 for your 1 to 4 unit mortgages. We are able to close very quickly. Speed is the name of the game in a lot of these things, and we have the capacity and the tools to help us do that. Multiple programs, right? So it doesn't matter if we're doing a mixed use today, a 1 to 4 unit tomorrow, if we're doing a commercial bridge tomorrow, and then a commercial mortgage, right? So we're able to assist them with all of their needs and make one relationship. We keep all their docs in a secure location where we're able to transfer them. So if they're doing a second loan with us, they don't have to go ahead and start sending over everything from fresh and starting that whole process over again. They already have a relationship with us and a file with us where we're able to just get asked for the new information for that property. We offer the free extensions, which a lot of lenders will charge 1 or 2% for, as well as we offer the as dispersed interest, right? So there are some lenders that will offer a little bit better of an interest rate, but they're also going to come with full boat interest, right? So if I'm doing a 50, or 100K renovation, I could be saving lots of money every single month just by doing the as dispersed. Even if I'm paying a slightly higher interest rate, I will still come out more profitable. The back office support that I mentioned, where our team will be able to speak with and work with the legal team, title team, as well as insurance team, and any other third parties that are needed to be able to bring that transaction to a successful close. We also offer no prepayment penalties whatsoever. And another thing that we offer are some resources. Number one is any past webinars that you want to view, you're able to come right up top here to view them. You're able to subscribe to deals. So we work with a lot of wholesalers who will send us deals, and we'll be able to share them with our borrowers. So to get added to that list, the borrower can come here, add their email, phone number, name, and which location they're looking for deals. We only included our top MSAs in order to ensure that, because again, I'm probably not going to get a whole bunch of deals in Tennessee, for example, right? So I like to try to keep it where we see deals. This way we're able to share them with our borrowers. Actually, this is just a foreclosure, just a page, just to kind of give them some ideas how it works, get more information on it. But more importantly, the two things that I like to highlight are our affiliate partners. So you, as well as your borrowers, are able to come here and get access to all of our affiliate partners, which offer discounts to use their products, right? So sometimes they'll have property management softwares. We have RIAs that they can attend to. We have different types of programs with investors that'll teach more and explain to you and give you more of a hands-on approach. All of our borrowers actually will get a membership to Anqua, which is actually going to give them one of the bigger benefits of being a part of this. It's an entire program. I would recommend everyone check it out. But one of the biggest things that come with it is a free rapid pass for Home Depot, which gives you about a 20% off of all your purchases. And again, kind of just look through it, see they can find lead sources, ways to find more foreclosure deals, and just get in front of more properties. And then lastly, we have the deal calculator, where this is a resource for both you and borrowers you can use to understand and underwrite your deals, right? So if a borrower calls you up, hey, this is my purchase price, this is my ARV, and then you could do some math to say, okay, well, the loan amount would be somewhere around here. What are we going to spend on the renovations? How long do we think it's going to take us to flip the property, right? And then we could choose all this information, set it up, and then it'll come back down here and give you full breakdown of your deal, right? So here's your profit and loss. This is what your purchase price was. This is what you'll spend in interest and origination, and so on and so forth, right? So this is a great tool to use to understand, hey, does this show a profit? Does this deal make sense for my borrower to do? Or is this a waste of time and not going to go anywhere because he's not going to make $1 on the deal? And I can do the same thing for a rental property. And both of these will also allow you to generate a PDF, which will get emailed to you with all the information so that you can return back to this at a later time, right? So you can put in here the amount of units it is, what your income would look like, your expenses, what loan to value you anticipate borrowing at. This way you could understand what the numbers look like. You could do some quick underwriting and say, okay, this deal makes sense. My DSCR is a 2.6, so we're very far ahead of the curve. And now all I got to do is get the deal over to Express Capital to get that deal closed. And that covers pretty much everything. I'm going to stay on for another minute or two and allow anyone that has questions to ask them. Again, I'm here to help you guys, provide you guys with as much information that you need in order to be able to work better with your borrowers. While I'm waiting for anyone that has questions to ask them, one more thing that I would like to mention for anyone that is going to be signing up as a broker, you can hit the broker referral program over here, click referral and broker programs, and you will be able to click right here, and it'll ask you for your email address, and it'll send you the DocuSign version of the broker agreement so that you can get set up with us. And then all you got to do is start sending in deals. So Rob, I think I just saw your question now, and I happen to have just answered it for you. But just in case if you missed it, again, broker referral program, hit the referral and broker program page, click here to get started, and we will take a look at, and you'll be able to start sending deals over to us right away. And we will also send you over a broker Google Drive box, which includes some basic information, documents, draw process guides, processing guides, and things like that to kind of help you navigate through the products and the transaction. All right. Well, if we have any other questions, now is the time to ask. I'm going to let everybody go in just a moment. Or if anyone wants to reach out to us or has any questions about anything that was discussed in this webinar, you could feel free to email info@expresscapitalfinancing.com. Again, that is info@expresscapitalfinancing.com. And you could call us at 718-718-9. Whoa, this is not good. 285-0806. There we go. 718-285-0806. Rob, is there a limit on what we can earn on deals? No, we generally ask that our brokers try not to charge more than us as the lender, as we take all the a lot of the risk involved in the process, as well as our processors' times to go ahead and close the loans. But other than that, we do not cap our brokers on what they can make. Casey is asking, can I get a copy of the webinar? Yes, you may. Just feel free to email me if you don't mind at info@expresscapitalfinancing.com and give us, well, the holiday does start tonight for me, so give us till about Monday, Tuesday to be able to get this ready to be able to be sent out. We got two questions about the same. Rob, we do not have an office in Florida. Right now, our offices are in Brooklyn, New York, and in Monmouth County, New Jersey. We hopefully look to expand in the next couple of years to Florida and Texas. All right, guys. Well, I hope you guys all have a wonderful Thursday evening, and I look forward to working with each and every one of you. And if you guys have any questions, please feel free. Our contact information is all on our website. You can come meet us at our offices, one in Brooklyn, one in New Jersey. You have our phone number, 718-285-0806, and our email, which is info@expresscapitalfinancing.com. I look forward to, like I said, to working with each and every one of you guys. All the best.